But right now, big market rally. Last Monday of the month, our next guest, meantime, recently recommended individual investors have the following in their portfolios. He said 25% equities, 25% real estate, 25% gold, then another 25% in cash. MARC FABER joins us now, the telephone publisher of the Gloom, Boom, and Doom Report. So with this rally, up 300 in New York underway, Dr. Faber, we'll start there. Is that the right allocation for the most part, average investor still?
Yes, I think so. I think the rally came from a very oversold level. We have a very strong support on the S&P between 1100 and about 1150, and it came right from this support level. And usually the December month is a strong month as well as January, so we have seasonal strength and oversold condition, and we can rally. But I don't think you should expect too much. I think we'll get into overhead resistance when the S&P rallies another 5% or so, between 1250 and about 1300.
Okay, so that's another 5% from here, just below 1200 today. 1196 is where we are on the S&P. All right, so let's try to gauge then what's next. There's two parts to this. Number one, what happens in Europe? Now, you've been a big proponent. You've been saying the Federal Reserve quantitative easing is going to continue. It can keep buying bonds, prop things up, Federal Reserve in the United States. What happens in Europe, and what is the American consumer going to do now that we're in the holiday shopping season? Take both of those in whatever order you want.
I think the American consumer went shopping, but I think it's not supported by income growth. If you look at the share of labor income or salaries as a percent of GDP going down, what is happening is that people are again borrowing and diminishing their savings rate. And I don't think that is very sustainable.
And what's going to happen in Europe? How's it going to end? Or what's the big picture end game in Europe? Have you figured that out yet, or is anybody?
The big picture end game in Europe is that they will also, in one or the other form, monetize, like in the U.S.
Keep pumping money.
That will postpone the problems, but it will not solve them.
So no big, because now the report is, or the rumor is, there's going to be some sort of a big kind of fiscal coalition, much more much more to it than they have now, where the law would say, hey, listen, this is what you can do on a budget deficit. You can't go over it. Now we know that that's been pretty much a joke for the last 10 or so years. You don't think they'll say that people will sign on to that, because part of the rally today appears to be on that optimism, and we're trying to figure out if it's for real or not.
Yes, basically the optimism arises from some sort of a bailout and monetization. But you look at the market, okay, it's up. But gold is also up, oil is up, and I don't think it will really help. It will just postpone the problem. Like in the U.S., we monetize times and again, and they're just postponing the problem. And the end crisis will eventually happen. The problem of the Western world is that there is too much debt and too many unfunded liabilities.
Okay. That's Dr. MARC FABER, noted global investor. You heard it here, about 5% in the market, but don't get carried away. Talk to you soon again. Dr. Faber, thanks for coming on.
Well, thank